Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Raymond Sheffield. Ray is an attorney specializing in trusts and estates with his own company, Sheffield Law Group, in San Jose, California. He's been a lawyer for 11 years. He received his law degree from Santa Clara University and an LLM degree in estate planning from the University of Miami in Florida. Ray tells me that he loves the role of counseling clients for their estate planning. In addition to his law practice, Ray is an adjunct professor in the Golden Gate University LLM tax program. Ray and his wife live with their two adopted daughters, ages 4 and 6, who are from Russia, in Almaden Valley, San Jose, California. Now today, we're going to be talking about a survey of estate planning basics. This is kind of an ambitious undertaking. We're going to try to do a bird's eye view of this overall picture for estate planning. As I get started, I want to caution our viewers that we're discussing issues in a very complex area. So this is just a starting point for a bigger discussion. We want you to get qualified legal and tax advice. Also, we're mostly addressing issues from a federal and California standpoint. So, for example, California is a community property state. Viewers in other states should seek advice about their local laws. Ray, thank you for joining me today.
Thank you, Mike.
Here goes. We're going to try to do something very ambitious here, but we hope that you'll get some benefit from it, folks. All right, Ray, how do you start this estate planning process?
Well, most of the time the client calls and says they need to see me for some reason. You know, they know they need to put a plan together. They may or may not have any idea what they want to do or what they should do. Of course, some people come in and they know exactly what they think they should do, and they want me just to do that. But our practice is a real counseling-oriented practice, and we just don't put paper together, right? So we want to really talk to the client about, well, what's your situation, right? Who are you? Tell me about you and your spouse. Tell me about the kids. What's going on in your family? Tell me about your parents. What do you do for a living? So that we can help you make good decisions that will lead to good results after you're gone.
Right, okay. So, one of the things that I wanted to point out is that estate planning isn't really just about planning an estate. It's also a lifetime planning process, thinking about what future needs are going to be.
Well, absolutely. I mean, you know, while you're still alive, and one of the most important aspects of an estate plan is making sure that we know how you're taken care of when you can't take care of yourself. And very little people spend much time thinking about that. They think about, when I die, who's going to get all my stuff? But more and more people are going through a period of decline and a period of incapacity before they actually pass away. And we want to make sure that the property is protected for your benefit. We had a case in New York you may have read about a couple of years ago, Brooke Astor of the Astor family. She's worth hundreds of millions of dollars, and her son had her living in squalor in her Park Fifth Avenue apartment, spending no money on caregivers because he figured she was going to die anyway, so what's the point of spending money? And so we really want to work through who's responsible and what are they responsible for doing while you're alive to make sure you're taken care of as best as possible. And then when you die, what do we do with the assets?
Okay. Another thing is we're really in an uncertain environment for estate planning. We don't even know what the laws are going to be in a couple of years. Maybe you can comment about that a little bit.
It's very unfortunate that Congress is moving the ground from beneath our feet on a constant basis. And they're not giving us a law that is permanent and consistent over time. So unfortunately, I don't have any control over Congress. But if you want to write my name in, I guess, see where that gets us. But the reality is that, you know, things will change. So you want to make sure that if you're doing a plan, that the plan is flexible to be changed. And I don't mean just flexible to be changed so you go to the lawyer and change the plan, because nobody wants to go to a lawyer every time they want to make a change. But flexible in the sense that when you die, the surviving spouse, for example, can make some decisions that'll impact based on what the law is then, rather than having a plan that's traditionally designed when we had stability in the law that says you must do this and you must do that. So we want to have flexibility in that plan so the surviving spouse can make decisions that maneuver, still accomplish your goals, but also be able to fit in with where the tax law is going to be at that time, because who knows where that's going to be when you die.
Right. Okay. So what are some things that you do to try to understand the family? Or maybe I should say, what are some of the family issues that you need to think about when you're doing this estate planning process?
Well, certainly when we talk about the kids, right? Tell me about the kids. Are they all employed? Are they financially stable? Do they have their own independent wealth? Tell me about their spouses. Are the spouses getting along with the family, or are they creating problems for the family? Because that spouse is going to be in your child's ear telling them do this, do that, you know, whatever it is. Do we have any drug, alcohol problems, whether they're gone or they still exist? That's hugely important. Do the kids trust each other, or do they not, right? Because, you know, naming a trustee, and we'll talk about that, I hope, a little bit later, you know, if you don't trust who the trustee is, it's a disaster from the start. What about your grandkids? Or, you know, if you have any, are they adults as well, or are they, you know, young kids? Are we providing for them? How about each other, right? And what about your parents? You know, we live in the sandwich generation where you're trying to take of young kids and your parents at the same time. Do you trust that your husband will take care of your mom when you die? Or do we need to set aside some money to make sure she's taken care of and not have to worry about her relationship to him after you've passed away?
Right. How about special needs?
Well, certainly, you know, if we know there's a child with special needs, that's something we can certainly plan for. But in a lot of planning, what I think is real important is planning for the child who doesn't currently have special needs but might someday. We all go through periods of incapacity, but it could be that the car accident that kills you leaves your child with an injury. And so it's very important in your planning that you make sure that you get documents that say, if I have this situation, then this is the result, right? And that special needs planning is part of every estate plan, not just, well, I have healthy kids, so what does it matter? Because we don't control our futures. And unfortunately, if you end up in a situation where you have an accidental special needs issue, you now have huge court costs, and ultimately the state may take the money away when that child dies or earlier, depending on the way you've drafted your trust and the ability of your legal counsel.
Right. Are there some assets maybe that require some special attention related to this estate planning?
Well, certainly, every asset is different and unique, right? The biggest thing that we see in our office is, things like corporations or business entities. They're treated one way. Real estate is treated differently, and certainly with Prop 13 here in California, making sure that your plan will allow that Prop 13 assessed basis to transfer to the kids is vitally important. And you definitely don't want to create a plan that's going to create reassessment down the road because you didn't do your plan properly to preserve it. There are also issues with the life insurance. Most of the time we see clients saying, well, leave the life insurance directly to my spouse. And the problem with that is now it's outside the trust. And if it's outside the trust, is it going to ever get back in the trust, or are we going to have now competing plans at some point in the future. Retirement plan assets, and I know we have another topic that we're doing, talk on that, is very unique and requires very special attention.
Right. So we've done a whole program on retirement accounts, folks. You can find it at financialinsiderweekly.com under past episodes. I guess I'll just throw out another one because it's an area that I work in quite a bit, and that's employee stock options. And here in Silicon Valley, this is a major asset for many of the people, and it requires special attention again.
Absolutely, you're absolutely right, Mike. For many companies, you have 90 days to make a determination as to what's going to happen with those options. But oftentimes, depending on the situation you're in, and this usually happens especially in second marriages, or if you and your spouse die at the same time, nobody really knows who's supposed to be in charge, and then trying to figure out, well, do you even have assets and what are we supposed to do with them? The clock is ticking, and so we want to make sure that we prepare in our documents who exactly is in charge of these and what are they supposed to do. And we usually give that to HR when we create the plan. We don't just wait until you die and then try and figure it out later.
Yeah. Another big area, well, let's see here. One that we, again, talked about, but maybe we can just mention it again briefly, is one of the spouses not a citizen.